In the previous video, we looked at section A, and section A covers the compulsory section of the economics paper 1 May June past exam paper, and our main focus it is 2021 past paper, and we are still looking at economics, and the main focus is still on economics paper 1. We've completed section A. Look at question number 1.1 to 1.3. If you'd like to look at section A, please look at the previous video that I've posted, which mainly focus on section A. So our main focus now will be on section B. Section B has a total of 3 questions. So that will be question number 2, question number 3, question number 4, as well as question number, it will be question number 2, 3, and 4, right? So we'll have question number 2 to 4 on this section, which is section B. Each and every question will be done on its own separate video. So it is very important that if you want to cover all the questions, all the 3 questions for section B, you follow me and look at all the separate video that I will be covering section B on. So what is important, candidate, to understand is that we are not only going to be looking at 2 questions, however, we're going to look at the total of 3 questions. And the reason that we are doing that, it is because I am preparing you for the exam. In order for you to be well equipped for different kind of question, we need to look at all the questions and not just only 2 questions, which is what you'll be doing when you're selecting the questions to answer for section B in your main exam, either in your trial exam or rather in the final examination. Now let us move and look at what we'll be looking at. So this video will cover mainly question number 2, question 3 and 4 will be looked at on their own separate video. Again, we are on section B, and section B you need to answer any of the 2 of the 3 questions in the answer book. It is very important, candidate, again, we are going to answer all the 3 questions, but all the 3 questions will be covered in their own separate video. However, in the exam, you're only going to select 2, not 3. I'm doing 3 questions, so all the 3 questions for the purpose of preparing you for the trial exam as well as the final. Now let's just look at question 2. Question 2 covers macroeconomics. It is 40 marks, and the candidate is expected to spend 30 minutes. Or rather, because we are looking at the past paper, the candidate was expected to spend 30 minutes of their time. So what you would have done if you were the candidate writing this paper, it is important, candidate, to understand in this case, on this time, you would have to make sure that once you've reached 30 minutes, it's either you are done or you're not going to spend so much time greater than 3 minutes. So make sure you read with understanding and you're able to answer fast and answer what you are required to be responding on. Now 2.1, answer the following question. So in 2.1, we're going to be reading the statements and answer the question. It is also very important, candidate, to understand that when you go through the question, I will give you more than the required. The reason I'm giving you more than what you are required is because we are looking at preparing you for the exam. So it is not important for you to only look at what you are required, but to go beyond that. However, in the exam, you need to answer exactly what you are required. Now let's just look at 2.2.1. Name any 2 examples of strategic industry. Any 2 examples of strategic industry. In this case, candidate, I am going to give you more than 2. However, if the same question were to come in your exam, either for the trial or the final, you need to only provide 2. So what are those strategic industry? It is the energy or fuel, and ESCOM. So those are the example of strategic industry. So what you will say then in this case, because you are naming, you'll say you one, say number one. The first one you will say in this case, energy. And then apologies for the letters. Ne. So you say energy. And then number two, you will say iron and steel. So iron and steel is also an example of strategic industry. You'll see in this case, iron and steel. In this case, based on the exam requirement, you will be done. However, there are other strategic industry, and that will be your basic food stuff, or what we call agriculture, your chemicals, or what we normally call fertilizers, that will be your manure that is used in the production in the agriculture. It is mining. Mining is also a strategic industry. Telecommunication, when you're looking at things like Vodacom or MTN, they're also strategic industry. They're helping you and me to connect. There's a vaccine manufacture. So those companies that work on the drugs like ARVs and different kind of vaccine that are helping, or drugs that are helping people with different kind of disease. And then there's a tourism. Tourism is also a strategic industry. And what are they specializing on? Obviously, they're specializing on um, visitations, and people are on holidays, where they go, how they treated, how they need to be accepted, how they need to leave the country and stuff like that. Automobile, which is like your cars, they're also part of strategic industry. So in your exam, you need to use any of what I've mentioned, but a maximum of two if you're required to provide two. Then 2.1.2, how does progressive income tax system influence income redistribution? So how does progressive income tax system influence income redistribution? So now you are explaining how does progressive income tax influence income redistribution. So now, because you are explaining, you will be provided 2 marks. You just need to provide one statement, and for that statement, you will be provided 2 marks. So progressive income tax influences income redistribution by reducing the gap between the rich and the poor. So, what is the main thing that you need to understand about progressive income tax? So, progressive income tax, it reduces the gap between the rich and the poor, right? So, how is it doing that? The more income you make, the more you are taxed. The less income you make, the less you are taxed. So, the gap is reduced. So imagine if everyone was taxed 18% in South Africa. So it would mean that people that are earning very high compared to the low income earners will have way more money than those people that are getting paid less. So for government to reduce that gap in terms of wealthy, government is then putting what we call progressive income tax to reduce the gap between the rich and the poor. So the main thing that the marker will be looking at is that you talk about the reduction of the gap between the poor and the rich. Now let's just look at the next question. So the next question is 2.2. 2.2 says, start the table below and answer the question that follows. So you are not going to be able to answer the question properly if you have not started the table below. So answering questions for this question, which is 2.2, is highly depending on you understanding what we have on the table and read the information that we have on the table. South Africa's national account aggregates expenditure on the gross domestic product. So it is in millions, and we're looking at the year 2019. You'll see the year is very far based on the fact that this is the past paper that was written in 2021. The past paper might look as like it very far, but it is still relevant for your understanding and for preparing you for the main exam. It's a constant 2010 prices. Final consumption expenditure by household. So the final consumption expenditure by household. So we're looking at consumption by household. And final consumption expenditure by general government. If you're looking at a household, they spend 3, based on what we see here, 3 million, but obviously everything here is in million. So we're looking at 3 million, and when you look at government, it's 1 million, based on what we see here, but obviously remember it is in millions also here. And then when you're looking at gross capital formation, it is less than a million. So it's like 893. And then when you look it down, you are given gross domestic expenditure. So that is a gross domestic expenditure. To get gross domestic expenditure, it is a combination of gross capital formation, general government expenditure, as well as household expenditure. So when you add everything, then you get what we call gross domestic expenditure. Then you have a residual item, which is like a little bit small, it's likely 19,000, and you're looking at gross domestic expenditure, including the residuals. And then you have export of goods, and then you have import of goods and services. And when you're looking at that, you have 1.5 million for the export, and then for the import, we have 1.49 million. And then we're looking at GDP at market prices. So how do you get that? Because you need to understand how to get that. Okay. So how do we get GDP at market prices? So you need to understand how to get GDP at market prices. So GDP at market prices, it is a gross domestic expenditure. Then you adding the export, and then you subtract the import. And then that's what you get. You get GDP at market prices. So that is roughly 5.1 million. So this was adapted in the Reserve Bank.co.za or Webby indicators, and that was for information that was available as of June 2020. Now that we have looked at the information that is presented to us for gross domestic product on the national accounts aggregate, now you need to look at the question that we have. 2.2.1, which year does the South African Reserve Bank currently use as a base year? You need to understand which year does the Reserve Bank use as a base year. So the correct answer will be 2010. So the correct answer in this case will be to say the correct year that is used as a base year, it is 2010. And then 2.2.2, identify the figure used to cater for errors and omission when calculating the gross domestic product at market prices. So what is the figure used to cater for errors and omissions when calculating the gross domestic product at market prices? It will be the small amount that you see on the screen, and that was what we called residual item. And since you are asked to mention or to provide or to identify the amount, then you're going to bring this amount, which is 19,097 million. So that's what you will have here. So the correct answer in this case, when answering this question, will therefore be 19,097 million. or you can say mil, or you can say 19.07097. And then 2.2.3, briefly describe the term gross domestic product. So you are defining the term gross domestic product in your own understanding and in your own word, or based on what you've learned in class. What is a gross domestic expenditure? So it is a spending on all goods and services produced within the borders of the country within the specific period of time. So it is this expenditure on all goods and services produced within the borders of the country within a specific period of time. So it is for that reason that when we were looking at the GDP at market prices, our main focus was what we have exported and what we have spent in the country, and we're to reduce by the import, because import is not what we have produced within the country. So now, how you will explain the term, because now the main thing that the examiner will be looking at, it will be the spending of goods and services produced within the country during the specific period. So most of the term here are important. So we're looking at spending. We're looking at spending on all goods. So it's on all goods and the services. Candidates is very important. Produced within the country during a specific period. It is very important to write that during the specific period. Right. So now you see that the most important thing, you have to talk about spending of all goods and the services, and it should be produced within the border of the countries and during the specific period. So it is very important that you write that and make it visible to the examiner to see that you understand what you're talking about. And then 2.2.3, briefly describe the term gross domestic product. So this is what we were entering. Apologies, I should have put it underneath, but it's fine. It related to 2.2.3. And then we're looking at 2.2.4. What effect would an increase in imported clothing have on domestic textile manufacturers? So now, what effect would an increase in imported clothing have on domestic textile manufacture? So think of, if we import more clothing from Shein, what will happen to the manufacturers of textile in South Africa? What does it mean for them? So there are a number of things that can happen, right? But in this case, you are supposed to only provide one effect. And how to know that? Because you are provided only the 2 marks for the question. If you're provided 2 marks and you need to explain, then you know that you are only required to provide a response of one statement. Now let us talk roughly. What are the effects of a lot of import to the goods that we're producing in South Africa? Right. So, domestic textile manufacture should face more competition that might force them to produce less. Understand, if you buy more Shein clothes as opposed to going to Mr. Price, if Mr. Price source from local manufacture or the manufacturers that are based in South Africa, you are causing a negative effect on those companies that are producing product for the Mr. Price. If you do that, and we have Edgar's that is buying from the local textile manufacturer, they are going to be affected. And what does that mean? It means that they're going to have to reduce the number of clothes they are manufacturing. And if they're reducing the number of clothes they are manufacturing, it is also an effect to the economy. But they might have less customer, market share, or sales that will reduce profit. So what does that mean? Now, they will not be able to price their product the way they would like to price because now the competition is heavy coming from the import sales or imported goods. And also the customer reduced because instead of customer buying from them, they are no longer buying from them, but they are buying from Shein. That is an example. They might be forced to be more innovative due to high competition from foreign producers. So what does that mean? They need to go to the Shein website and see what is it that is different that Shein is doing. Then they will have to adopt to that so as to make sure that they are not losing the market share. Quality of their product should improve and they will become more competitive in global market. So now if their quality of their product improve, they will be competitive because if you can they can prove that they are producing quality that is better than what are we getting from Shin, then it means that they stand a better chance to gain in the market share. So now how are you going to respond then? Because the main purpose is to understand how are we going to respond. So when you're responding, you're gonna say that will result to more competition that might force them to produce less. So there will be more competition that will force that will force them to produce less. Uh, them to produce less. Right. So that's what you will say. However, you need to choose based on what I've stated which one do you like. I'm just giving you one because in this case, you are only going to get 2 marks. And for 2 marks, you need to explain only one thing. So you can talk about the market share, the loss of sales, and the reduction of profit. You can talk about the competition. You can also talk about the quality improvement. So depending on what you feel comfortable. But I have given to you what I would have said. Should I be the candidate writing the 2021 exam? There will be more competition that will force them to produce less. Now let's just look at 2.2.5. How does gross capital formation impact the economy positively? How does gross capital formation impact the economy positively? So what is important here is to understand we're talking about gross capital formation and how does it affect economic positively. Again, candidates, when you're looking at question like 2.5, you are um, providing um, how does the gross capital information impact economy positively. So each and everything that you are bringing in your statement, you get 2 marks as long as it's correct. So since you have 2 times 2, it means you need to provide only 2 statements, not more than 2. So make sure what you bring forward in your solution, it is the correct answer, and you believe that it is what will earn you mark. Do not write 3, 4. You will be wasting your time, and the examiner will be marking only the first 2 that you would have provided. So, how does then the gross capital formation impacts the economy positively? The increased capital base of the country will increase production capacity. Gross capital formation will contribute to the growth potential of the economy through value adding processes. Balance of payment problems will decrease by an increase in the export production. So, what does that mean? It means we are producing more and then we're exporting what we've produced extra. And by producing more, what does it mean? It means more income for the company, right? Household may benefit from employment opportunity, thus reducing poverty, and government will achieve its goal of full employment and collect more taxes and revenue. So, what is the major thing that government is looking forward in the country? So, the major thing that government is looking forward for and will forever be looking forward is that they collect more tax and then the unemployment rate reduce in the country. So, if that happens, that means the ultimate goal of existence as government will be fulfilled. So the gross capital formation, therefore, it assists the economy in that way. How? it assists in the way that the poverty will be reduced and there will be more employment. So now in this case, I'm just going to give you the points that I would bring forward if I was writing this exam, and this will guide you in terms of what and how to respond to the questions of similar nature. So since I have stated to you two responses are needed, what I will say, the gross capital formation, what does it do? Household employment rate will increase. So we're looking at employment rate. Employment rate will increase. Household employment rate will increase. Household employment rate will increase. Will increase. Thereby decreasing poverty. Right. So that's an important thing that will happen. And more income income will be generated by firms. More income will be generated by firms, by the firms, and government will collect more tax. Government will collect more tax. Will collect more tax. So that's how gross capital formation assists. That's number one. And number two, what I will be looking at. All right. So what I will also say, there will be an increase in production capacity. So there will be an increase in production capacity. If there's an increase in production capacity, then we'll have more export capacity. That will lead to more export. That will lead to more export, right? And obviously, if there is more exports, the issues of balance of payments will be resolved. So that will assist in resolving the issues of balance of payment. So resolving issues of balance of payment. So that what I will say, if we are looking at question of similar nature, so say how does gross capital formation impact the economy positively? We're looking at positive impacts. Therefore, what we're saying here should be something positive. Do not bring back negative things, but you're talking about things that are positive as a result of capital formation. So that took us to the end of 2.2. We're now moving to 2.3. In 2.3, again, we need to start at the extract below and answer the question that follows. Now, again, candidate, you have to read with understanding with whatever that you are provided, because it is important for you to respond to the question. Study the extract below and answer the question that follows. So, economic integration, new free trade area in Africa. The United Nations Conference on Trade and Development and the World Trade Organization play a role in international trade. Right. So now we know that we're talking about United Nations Conference on Trade and Development and the World Trade Organization. We're saying they play a role in international trade. In May 2019, the African Continental Free Trade Area, AFCFTA, was launched to grow countries' economical through regional cooperation and integration. AFCFTA aims to unlock manufacturing potential and facilitate industrialization in Africa. The continent currently accounts for only 1.4% of the global manufacturing output and is plagued by infrastructural challenges and corruption. So the reason we are only contributing 1.4%, it is mainly on the challenges that is on the infrastructure when you're looking at African countries, as well as the corruption is also playing the role. We've seen a number of corruption happening. since post 1994. So now that is also having an influence in terms of our accounts for the global manufacturing output. Now, 2.3.1, name the institution that promote trade liberation. What is the institution that promote trade liberation? It is World Trade Organization or WTO. So any of the two will be correct. So what I will write on screen, I will then say WTO. You will recall from the class, WTO, it is World Trade Organization. So that's the institution that promotes trade liberation. Then 2.3.2. Give one form of economic integration. Just one. Candidates, it is very important to understand you are asked one and you get 1 mark. So if the question like this comes, you only need to provide what you've been asked. In this case, you are asked just one form of economic integration. So now how do you then respond to that? You're providing just one. I'm going to give you more than one, and on screen I'll write one because that's what you will be expected to provide. So if you're looking at economic integration, it's your custom unions, your common market, economic unions, monetary unions, and free trade area. So those are the economic integration. So what will you put there? Free trade area. Just put free trade area. So that is one form of economic integration. However, obviously the other one, which is monetary union, economic union, common market, as well as custom unions, are also part of economic integration. Now we're going to move to 2.3.3, briefly describe the term free trade. If someone comes to you and say there is free trade in South Africa, what does that mean to you? Or what have you learned in class about the term free trade? So, free trade is when consumers and producers are free to buy goods and services anywhere in the world without restrictions. So, what does that mean? It means that you can decide that you want to buy all your clothes in the USA and there will be no restriction in terms of you buying the clothes in the United States of America or in Europe. So, that's what we call a free trade because now consumers and producers are free to buy goods and services anywhere in the world without restriction. Now I need to write on the screen in terms of how are you going to answer. So you're saying consumers nice, and producers. Apologies. I'm gonna say consumers and producers can buy anywhere in the world, can buy anywhere in the world. Without restriction, right? So that means you can buy worldwide without any restriction or limitation, right? So that is a free trade because consumers and producers are free to buy goods and services anywhere, right? In the world without restriction. So it is very important, kindly, to understand we're talking about goods and the services here, right? We are talking about goods and services, and you're able to buy those goods and services without any restrictions. And then we're gonna move to 2.3, 2.3.4. Why will import substitution have a negative effect on consumers in the long run? So why will the import substitution have an impact on the consumers in the long run? So the reason that the import substitution will have an effect on the consumers in the long run is because consumer choice will decrease as they will be limited to domestic products only, right? So the choice will be limited in terms of where they can buy. So they're only going to be buying in a domestic market, or they'll be buying what is produced by South Africa. Consumers may pay higher prices on domestic products due to less competition because now there's a restriction in terms of where they can buy. There is no free trade. They will be limited in terms of where to buy. So meaning to say they will only be buying in South Africa. If they're only buying in South Africa, what does that mean? Unfortunately, if they are only buying in South Africa, only South African products, the competition will be low. South Africa will also know that there is no competition. For that reason, the producers that are producing that particular product will ensure that they are getting as much profit as they want, which obviously will be an effect in the consumers in the long run. And who are the consumers? Are people that are benefiting on the product that is produced by the domestic purchases. So how are you going to say that the will we can say there will be limited choices on the consumers, right? So you talk about it's important that you say um, it has a negative impact because there will be limited choices on the consumers. So here you just need to bring one answer. So you talk about limited choices on the consumers. I've already stated the other one that obviously there will be a no competition and the prices might be pushed up by the sellers. Now we're going to look at 2.3.5. How could African countries benefit from a new free trade agreement? So, how could African countries benefit from the new free trade agreement? So, now in terms of how, I have a number of reasons that I can provide, or rather, I'll provide to you. However, if the question of this nature comes, you only need to provide two. Is a two statement and then 2 marks. Provide two statements, you get 2 marks. Do not provide above that. Do not try to impress exam. The marker, they will not mark you once they're done marking number one and number two. Because you are told in the instruction that you have to answer what you are required. So make sure that you respond with only two, and then with that two will give you a full mark that you are expecting to get. So now let's just look at I'm going to just explain to you in terms of how could African countries benefit from the free trade agreement. Enjoying lower prices on goods and services. They'll be enjoying lower prices on goods and services, enjoying free movement and job opportunities across borders, specializing in the production of goods where they enjoy a comparative advantage. Producing goods in large quantities that comes as a result of specialization, producing better quality product due to improved innovation, improving relationship through mutual gains from the exchange of goods amongst themselves, and also improving consumer welfare as a result of more choices of goods and services. So this is this free trade agreement of African countries, how it's going to benefit. However, I'm only going to provide you two. And the reason I'm going to write on screen only two, it is because I've already stated, candidates, you need to answer what you are required. So you are required to provide two statements. And then the first one will be, they will be enjoying lower prices on goods and services because of this free trade agreement. So there will be lower prices and on goods and services. And services. That's number one. And number two, what else will benefit the countries on this free trade agreement? So with specialization in the production of goods, right? So there will be specialization in the production of goods where they enjoy a comparative advantage. So, what does that mean? It means if Congo is producing certain product better than Africa, then Congo will be producing that thing they have competitive advantage on, and then they will then share with South Africa. So there will be specialization based on competitive advantages. So there will be specialization based on competitive advantage. Right. So it means that Congo will produce what they're good at and share it with other African countries. Therefore, the production cost will be reduced in that way. Now we are looking at 2.4. 2.4, you need to provide 4 statements, and each statement will warranty 2 marks. Now, if you're looking at 2.4, with the aid of correctly labeled graph, explain the effect of demand side policy in stimulating economic activity during recession. So, what is important here, candidates, is that you need to draw a graph. There should be a correctly labeled graph. And that graph need to be looking at demand side policy, explaining the stimulation of economic activity during recession. After you've drawn the graph, you need to explain what you've drawn. Once you've done that, what will happen? Then you will get 2 marks per statement that you will have. Now, so what we're going to do, I'm going to take you through 2.4 marking guide, and we'll look at it together. As we look at it together, then you'll have an idea in terms of how you would have drawn your graph, meaning to say we'll be looking at your y-axis as well as your x-axis. So now, with the aid of correct level graph, as it has already been requested, explain the effects of demand side policy to stimulate economic activity during recession. So what's going to happen then? On your y-axis, you will have general price levels, and on your x-axis, you will have output or real GDP. Now, let's just look at what we have. Now, first one, you have aggregate supply. That is the line that is we see here that I'm looking at, which is aggregate supply. And then when you look next, you have aggregate demand and aggregate demand 1. So why do you have aggregate demand and aggregate demand 1? It means that there is a shift of the aggregate demand to aggregate demand 1. However, when you're looking at aggregate supply, you only have one line. So now what happened when we see the shift of aggregate demand to aggregate demand 1? The quantity or the output of the real GDP, it also shifted, and the prices also shifted. Now, if you're looking at the movement from aggregate demand to aggregate demand 1, we are moving from the first equilibrium or the equilibrium to the first equilibrium. As you see the movement from E to E1, what do you see? The price increased from P to P1, and the quantity increased from Q to Q1. Now let's just read what we have so that we can understand also much better what we see on the graph. Demand side policies involve expansionary monetary, such as a decrease in interest rate that encourage borrowing that would increase consumption and investment. So the demand side policies, it involve expansionary monetary, such as the decrease in the interest rate that would encourage borrowing that would increase consumption of investment. So what does that mean? So that demand side policy, if they see that we have a recession, So what they would try to do, they would try to decrease the interest rate. If the interest rate is decreased, it is good for the economy because a person that was paying a home loan of 10,000 on the variable rate, now that person is fortunate enough that that person can now pay 9,000, making an example, and there's 1,000 extra that they can use for investment, right? Or rather, they can use for other consumption. So that means the producers, they need to increase the production of the goods, right? As long as they increase the production of goods, the price will be affected because now they are able to increase the prices as well because they believe people have more money to spend, right? Also, more people have money, the competition in terms of getting certain products will also increase. Expansional fiscal policy that involve a decrease in tax and an increase in government spending will increase spending as well. So if there's a decrease in tax and an increase in government spending, so what does that mean? If there's a decrease in tax, it means workers as well as the firms or business, they will be paying less. If they're paying less, you as an employee, if you're paying less, it means you have more money to spend on other things. If you have more money to spend on other things, you are spending the money on the businesses. And the business will have also more money to employ other people to produce what people who have more money from a reduced tax are looking for. And then also when government is spending more, that also means there will be increase in employment because more workers will be needed to manufacture the product that government will be looking for. And overall, there will be an increase in spending. So now let's summarize and look at this. So we have government. Government is increasing what they are spending on buying your books. So if they're spending more on buying your books, that means now the manufacturer of the books, which is Oxford in this case, will have to produce more books and therefore will hire more people who are producing those books or have a production skill. But doing that, what does it mean? More people employed, and as more people employed, more spending will happen. Now, on the other side, government is also reducing the tax. So those people who are taxed, they are not paying much on taxes, and those who were previously employed, they're also not paying much on taxes. Now they'll have more money, and that more money they have, what does it mean? So that more money they have, it will then basically means they can then use that money that is extra and spend on buying services, certain services or products. So now that's how the spending will be increased through the fiscal policy. So we look at monetary policy, which is linked to interest rate, and we look at the fiscal policy where we're looking at government action. So therefore, we are explaining what is happening and what is the reason that we see an improvement in the aggregate demand. And then both policies result in the shifts of aggregate demand from AD to AD1, while aggregate supply remains the same. So that's what you see in the graph. Because of the expansional monetary policy as well as expansional fiscal policy, you see an expansion in the demand while the supply remains the same. Real GDP will increase from Q to Q1 when aggregate demand increasing. Obviously, the aggregate demand we've spoken in the past or in other videos to say aggregate demand is the total spending of the government, the individuals and other spending. So if that there's an increase, obviously there will be increase in spending. Then we see the shift from AD to AD1. The general price level will increase from P to P1. Why will the general price level increase from P1? Because now, as more people are buying, it means that the sellers they have now capacity to increase the prices. While if the less people are buying, they have to reduce the prices to accommodate at least those people who are buying. The demand side policies may be used to stimulate economic growth through inflational may increase, although inflation may increase. Yes, the expansionary monetary policy as well as expansionary fiscal policy, they do help to stimulates economic growth. However, it does have the effect on inflation. So it does increase inflation. So now we've looked at the graph and we explain what it means. And obviously, during a recession to stimulate economic activity, it is done by two things, which is mainly expansionary monetary policy as well as what we call fiscal expansion policy. So now, who controls it? So when you're looking at monetary policy, it is by Reserve Bank, and when we're looking at fiscal policy, it is by obviously our government. Now let's us look at what follows next. So we've looked at 2.4. Now we're going to look at our last question. And our last question is 2.5. How could an increase in investment contribute toward higher national income in the economy? How could an increase in the investment contribute toward higher national income in the economy? So here you are also supposed to provide a total of 4 points. I will give you more than four. However, you need to look at the total of 4 points, right? So the investment will benefit national income by increasing the capital base of the economy to expand the production capacity, creating more jobs opportunity, and increasing income levels of household, thereby stimulating a great demand. Increasing competition when new business are established, resulting in the increased efficiency in production. It also can encourage, or it's encouraging in the production of new production technology, resulting in higher productivity. And also it expanding the tax base for the government, leading to higher tax revenue to finance infrastructure development projects. It's also increasing the competitiveness of local business on global markets, stimulating the demand of export. So if there's increase in the investment, it does helps a lot in stimulating. So if you're looking at the increase in investment, it contributes a lot on the income of the economy. All right. Because there will be more production as there will be more money invested. So that money will be used for the production. And if there's more production, it means more employment. It means SARS can collect more money. Some of the money will be used for infrastructure development. Some of the money will be used to create production for the export. So a lot can happen as a result of increase in investment in the economy. So what are we looking for? We look at increased production that will assist increasing the production of the country. Right. Now what else can happen? So we look at number two. It will help in expanding obviously the production of the country, and we're looking at the job opportunities. They'll create job opportunities. We'll see more job opportunities. Why there'll be job opportunities? There will be job opportunities on the fact that now the unemployment rate will go down because those people have to assist in the production, right? What else can happen when you're looking at number three? Looking at number three, the other thing that we can look at is that there will be increase in the export. Well, there will be increase in the export because we have more production. So we'll increase the export. And when we increase the export for the country, it means that by increasing the export, we are therefore able to make more money through the export or what are we exporting. And because I've said we need to have a total of four, what will happen then? Now the government will collect more tax. More tax will be collected by government. And how will that happen? Because there's more production, more job opportunities. People are employed, they're paying tax. Production and sales means more tax. Therefore, government will be able to collect more tax. Can you see how all this is linked? That takes us to the end of question number two, candidates. I'll see you in question number three. All the best as you prepare for your exam and good luck.